So like, what's the difference between gambling and investing?
There's a huge difference. So I think if you are short term, you're playing with the probabilities, because even the best company in the world with the best balance sheet, the most revenue and all that, it can go down in the short term. So if your time horizon is just 2 weeks, then you're just gambling that it's going to go up or it's going to go down in the next 2 weeks. But if the fundamentals are correct, you're going to get there eventually. Hello everyone, and welcome to another episode of Investing with Dimitri. Today I have my good friend and co-host at the Market Buzz, Nestor Mendoza. Join us, like, subscribe. Let's get into the video. All right, Nestor and I, we met in London during the last eToro Summit, and we start talking with a nice glass of scotch. And so let's revisit the conversation we had in September, because I'm always fascinated about other investors, what got them started, and what are their investment philosophy, which is different from person to person. So I would like to know yours, like, in detail. I know we do the episodes, the Market Buzz, but we never got to talk like one-on-one and dig deep in your strategy. So please let us know.
Yeah, it's funny enough because in the Market Buzz we're working on that, on an episode like that, to understand investing philosophies and everything that goes around. But yeah, we met in the Popular Investor Summit, and my strategy was very different from then till now. You know, I've been investing since 2017 when I started investing in crypto, and then 2020 when I finally went into stocks. Saw the opportunity to finally get in. But I've been studying economics since 2011? Yeah, 2011. Well, 2011.
It's been a long time
It's been a long time. Yeah. So I did economics, and then that helped out the way that I look at the world. It's interesting because when you're sitting in a classroom, you don't see the benefits of the class. You know, it's like the macro and all of that stuff. But then when you start to realize things, it does have a lot of sense how markets are in equilibrium until something happens. But I would disagree that they're always at equilibrium. There's always an adjustment period where people try to figure out. But yeah, I mean, so let me get to the juicy part of the question, which is like my investment philosophy. It's like, I like buying companies, and whenever you're buying a stock, you're buying a company that's behind it. You're buying buildings, you're buying infrastructure, you're buying knowledge, patents, information. You're hiring people in a sense, right? So I like to do my research on the companies that I like. You know, I started like everybody that gets into investing and into the financial freedom movement, which is just S&P 500 and NASDAQ. But my first trade was not actually that. My first trade was oil. Leverage oil futures on eToro, actually. And I remember the first $100 I lost, I did feel, you feel the nerves. You're like, well, that's $100. That's a number of hours of my work. So at the beginning, it was kind of tricky training that muscle of like, hey, this is like risk. Money can come in, money can come out. And I think I've gotten lucky whenever I started investing, because whenever I started investing in crypto, I bought at the top. And when I bought my first oil trade, I bought at the top. And then whenever I bought stocks, I did buy at the middle, and then I went to the top, and then they crashed again, 2022. So I think there's strength whenever the markets kind of crash, whenever you're getting started, because it shows the reality of what investing is, which is there's money at risk. You're getting a return because there's risks that are involved with investing, So I like to do my research on companies, and I like to invest in companies that are going to change the future. There's this question in finance that I don't know if you've done it. I'm sure you've dealt with this question, but it's like, let's say I have a contract, right? And this contract gives you $100 every year for infinity. How much are you willing to pay for that dollar? So for that bill, for that contract, sorry.
Yeah, that's a good question, and that's basically what investing is. In theory, if you are the purist, if you are the Warren Buffett, and based on your average holding period on eToro, you hold your stocks for quite a while. You're not, you know what? I was trying to size you up. What kind of investor are you? And I don't think you're a value investor. I don't think you're a growth investor either, or a macro. You are something in between. I can't figure out exactly what it is. And you know what? I'm kind of pissed off with people. They're putting labels in themselves. I'm a value investor, but you have Bitcoin. Come on, dude.
Yeah. Everybody's a value investor until they, yeah, exactly. Yeah,
Like,
I fully agree. I
like,
fully agree.
like a like if you see the definition of what value investing is basically buying undervalued companies and selling them like for more. So basically, everyone.
Yeah.
Okay.
Well, the majority no, because the majority, like, the majority of investors, whenever they start, they buy high and sell low. So
Yeah. Majority of investors are momentum investors. See where the momentum is, and there is this misconception in markets that everyone is a long-term investor, which is not the case. Being only 10% of investors are actually willing to hold for the long term. And I'm not talking about you get into a bad deal and you have to hold for a long time. I'm talking sitting on unrealized gains and let them compound, which how basically the real gains are made. But you don't strike me as a value investor.
I'm not. The thing is like I do like finding value, but it's unrealized value in a sense, right? So Nvidia's not a value investing. If we look at Nvidia, for example, Nvidia's not a value company, right? Like if we look, we're paying 20 times earnings, we're paying 18 times sales. Like what are we doing here, right? Like it's not a value trade, right? But what are they doing, right? Like I like to draw this, like I have this idea of the future and I try to predict what the future is going to be like, and I see what companies are fitting that description, right? So companies like Costco, which is like,
How do you find the companies though? How they how they go how they come into your universe? You let's say a new company comes into your universe. How they come? Do you read the Wall Street Journal? Do you watch CNBC? Do you have a conversation and say, you know what, that's interesting, let me look into it? And then you look into it and say, okay, you know what, let me put it on my watch list and watch it for 3 or 4 months. Is that how you do it?
so okay, so I tell you, so it's different, right? And this has evolved as time goes by, but it's like first it was kind of like whatever companies I used,
Mm-hmm.
I would start looking into them. Companies like, and like whenever I bought Nvidia my first time, yeah, it was like I liked their graphics cards. You know what I mean? Like I was like AMD is not as good as, so I was like, okay, I'm just gonna buy a little bit. Companies like Costco I went to, I enjoyed as well. So a lot of the companies where I just had one-on-one experiences and I knew what they were about and I understood a little bit of their business model and just enough to say with confidence, hey, like I know this company, like I don't even know what the management is trying to do. I don't know which direction they're trying to do. Like I've slowly become a more sophisticated investor as time goes by. But at the beginning, it was just like, let's pick some stocks. You know what I mean? Like let's pick some things and let's see how they perform, right? And then, funny enough, I bought at the bottom. So it's like in 2020, so everything worked until it didn't, and then I had to say, okay, let's start working. Let's go back to the drawing board and see, okay, what companies are actually making money, which companies are, and how can I find this information out? So then I started going into like earnings reports, and like I still have to deep dive into the 10Ks and all of this, like try to get the information from the source because they tell you everything. They legally have to.
Mm-hmm.
Right, so it's about finding those companies, and it depends on sort of like which position we're talking about here, right? Because I do have three different portfolios, right? But there's two strategies, right? There's my long-term strategy. There are companies that I buy and hold and I'm willing to like overlook the long term. And then I have a small size portfolio, which is usually around 10% of my portfolio, which is what I trade in and out with, right? And then that allows me to have a little bit more flexibility and see where the like where the, not the value, but where the opportunities are, right? So for example, when SMCI took a hit, there was a quick in and out opportunity, right? So with probably like 1 or 2% of my portfolio, I went in and out, made 10%. Like I think it was a 50% return
Mm-hmm.
on it, right? There was just an opportunity. Company was oversold. Market was not in equilibrium at that point. Company had been oversold because it was bad news, bad news, bad news. You take advantage of that, right? So there are different strategies, right? I do have those long-term holds, which is companies that I believe that are doing the right thing and they are the best in their sectors. And then I have the short acting, let's see where the value is, right? Or where the opportunities are, because the market is always giving you opportunities. You just have to be fast and knowledgeable enough in order to take advantage of them. And you're gonna be wrong. It's part of the game, right? You're gonna be wrong, and I've been wrong, and I will be wrong again in the future for sure.
You have to be decisive, and you
Yeah,
have to take chances that it might not go your way, and that's just part of investing. But
exactly.
it's interesting. You said I started with companies that I use, and this is what I believe actually about investing. Every investor, I believe, in some point or another, has made the switch from a consumer to an investor. There is a moment in each investor's life that said, you know what, Amazon, why not invest in Amazon and not just buy only the product? Let me invest in it. And Amazon was the company that made me switch my thinking from a consumer to investor. And I'm glad to hear that for you, it was also the case with NVIDIA and with Casco, because there is a pseudo intellectual element in investing that everything has to be so complicated.
You know what it is? Wall Street wants you to think is complicated. Bankers want you to think it's the hardest thing in the world. So
Yes.
you don't do it, and you rely on them. And it's funny enough because this is a journey that I've taken with my father as well, right? And my father's one of his first investments was with an investment firm. He put $60,000 into an investment. Poof, disappears.
Hmm.
We don't even know what they invested in. You know what I mean? Like, it was just $60,000 going. Yeah. Sorry, the fund collapsed, and it's like, what do you mean? Aren't you the smart people? You know what I mean? And I was like, you know what? Nah. It was outrageous, right? So it's like now that we're doing it as Hefner, and he's doing it he's doing it himself with me. He started a fund with his the G4 is the group called, and it's just companies. My dad used to work for Shell, and he met a couple of people there, and then they started a sort of like a friends and family fund where they've been investing and trying things out, and they have different strategies. And it's funny because like the only stock they hold in their portfolio right now is Nvidia, which is nuts. And I'm like, Dad, that's gambling. And he's like, no. It is guided. It is researched investment. And I was like, do you know, like, have you done any research in AMD? No. Have you done any research on Intel? No. Nvidia is the way. You know what I mean? So it's like, I'm like, Dad, come on. You know what I mean? Like diversification. Like, you don't know what you don't know. And he's like, no. Trust, belief.
It's conviction.
Yeah. Exactly.
And if it goes wrong,
Yeah.
it was risky.
Correct. Yeah, but the thing is like in this industry, you learn very quickly that you don't get paid, you don't deserve a salary in investing. You don't deserve anything in investing, right? Like you get paid if you're right.
Hmm.
That is the reality of this industry.
In Wall Street, they call it you eat what you kill.
Exactly. Yeah.
If you don't kill, you won't eat. So you have
Right?
it. You have to make it one way or another. You're not getting paid regardless of if you pick it right or wrong. That's not how it works. Even though some people believe it to be. And you know what? I understand exactly what you said. And I agree that Wall Street wants to just give you their money, just give them your money and let them figure it out. And you know what? If you get someone that doesn't know too much about investing, you can intimidate them. You can say, you know what? I'm gonna get your dollars and I'm gonna put them in UNH long and throw a couple of terms right there, and then they're gonna think that you're speaking Japanese.
Yeah.
But to
Yeah.
us, because we follow the industry and because we invest in it and we understand the terminology, the lingo, they can intimidate us.
Yeah. I'm like, okay, so what's your thesis? What do you mean your thesis? Okay, explain to me. Go into depth. Okay, like what is your numbers? How are you getting those numbers? What are your sources? Okay.
Mhm.
And then you start, it's like you're building a report. You're building a report every single time. So yeah, for sure. It's a way for them to intimidate you, but it's a way for them to get your money. It was funny because also my father back in the day, one of the first investments, like after he got started, also he would go to the banks and ask for investments, like investment advice. Huh? It's like, and the bank will be like, hey, that's cool. Give me $500 and I'll put you into this fund. So before they make you any money, they're already charging you. You know what I mean? So it's like they don't lose, right? If you want to sleep nicely, open up a bank because you get bailed out by the government. You know what I mean? And you just like you let you borrow money from people and let other people borrow it. You do nothing. other than hold money, which you really don't, you know?
Yeah, that's the quote from Billions.
Yeah, exactly. That's exactly where I got it from. It's like I like to sleep at night. How
Yeah.
about we open a bank? You know, it's like, and it's a reality, right? But you don't have to be risky, right? Like even the basic things, just like I remember we would go to Bank of America and just be like, hey, like what are you offering? It's like, oh, we're offering you 1% returns, and it's like, what? What are you talking about? Right? Give you $1 million, you give me 10K? Like, what are we
1%,
talking about?
1% return, and then inflation is 2.
Exactly, right? And this was before, like this was before COVID too, and it was just like there has to be a better way to make more money, right? And obviously, like in the stock market, it can go down, but you're expecting a 8% return a year. You know, that is what the expectation is. Was there? And so I was like, okay, let's try this out, bam, and we went to, and then you got to get used to the risk. If you don't get used to risk, you don't get used to, scare money, make no money. Depends on also what you're going to use it for, and for every single person is different. But it's something that I think it's a really good tool. The way that technology has able to democratize the access to contracts, like stocks and bonds and all these different tools that are with a click you're able to buy. I mean, like the invention of Robinhood, the invention of brokers like Interactive, eToro, have been insane.
You know what? Have an opinion about that. So technology, and you're right, technology have made this way easier for anyone, anywhere. If only if a person has internet connection, can trade, buy and sell, and invest or speculate in financial markets. But is it easier to make money than 20 years ago? Because 20 years ago, if you wanted to invest, you had to call a broker and he would try to pull you into his own thing so he can get a cut. But the good thing about it was if you were calling him the day that the market was down and telling him to sell, he would try to talk you out of it. Okay?
Yeah,
So is it better now? I'm not convinced it's better. I think it's easier. It's easier to make money. It's easier to lose money as well.
correct. It's
Especially
easy to panic.
it's way easier to panic. And with the 24-hour cycle, oh my God, you just put the TV at any time of the day. It doesn't matter what time it is. 3 o'clock in the morning, you stay in Asia. Something happens there, the futures go down, you start panicking. So is it easier? I don't think it's easier, but it is what it is, you know?
Yeah, no, it's interesting because the moves are a lot more violent and volatile. Like Trump being like just saying a couple of words moves the market 5-6%, and it's just like they're just speaking, like they're giving you their predictions, and it's like it's not pretty. But I heard this quote like recently that it says is like every single every single person on TV is giving you their prediction, assuming that nothing changes,
Yes.
right? But the economy is always changing, I have a joke. I have a joke about economists too. It's like an economist is the person that tells you what is going to happen and then explains to you why it didn't.
There's another quote that says that if you listen to economists the last 20 years, you made no money.
And you know what? You know what I think CNBC needs to do? Because it's funny because whenever you and I are talking, we have a portfolio backing our actions. We're
Yes.
talking and we have a portfolio. Show me their portfolios. Show me what they're saying. Show me Powell's portfolio.
I don't think Powell has an active portfolio.
Probably S&P 500. Don't forget about it.
All his holdings must be in a trust, in a blind trust. I'm just guessing. But the CNBC people, the more you listen to them, the more you are convinced that the institutional investor doesn't know more than us. Maybe knows more than the retail guy that doesn't follow the markets.
Yeah.
The institutional guy on like the professionals, not everyone, because there are a couple of people that they know exactly what they're talking about. But the majority of them, they don't know more than us. Just
Yeah.
they are closer to the action because they are in New York. They get the information just a bit faster than us, but they're not better than us.
But no, I would even say, there's the dumb money guys. They say that institutional investing right now, the only advantage they have is they have access to credit card data by the big
Mhm.
banks because they pay for that. And then, it's like, but we have access to social media. We have access to people that are right there. Like I remember back when I was trading oil at the beginning, I had access to this lady that works with OPEC. Like she's very close to the OPEC circle.
Yes.
So she got the news really quickly. And it was super interesting how easy with Twitter you were able to just get thoughts into the people that matter.
Mm-hmm.
So I don't know, like I've seen like technology has brought up this wave of not doom and gloom, but also access, access to education, as access to tools that only the rich had. You can now invest with $10 when before you needed to have like $50 to make a trade, like you said on the phone.
You know what? What I think happened with technology that allow more people to enter this game, and in a way, it's better because anyone can take a chance. Even with a little bit of money, you just start and then see how it goes. And then if you decide that you are good at that, then you increase the stakes. But it's much harder than people think. It's not Nasdaq up and the Nasdaq down on any given day and that's it. It's a bit more complicated than that.
Yeah.
Like last night, we were watching the Fed, watching J Powell. Okay, it was like a Thursday night. No, what day was it yesterday? Well, it was a Wednesday night. I'm losing days here. So it was a Wednesday night, late in the afternoon, and I had to go to the gym early so I can sit for 1 hour and watch Jay Powell talking about the economy. And if you didn't, then you didn't know why the market went down 2%.
Correct.
And if you don't know why the market went down, then you're going to get panic. When you get panic, you're going to sell. It's like, would you agree that 90% of our time is just reading and learning, and just 10% is the actual trading?
Yeah. Like I would say, like that's why the problem that I have with technical analysis, Akeem was talking about that today in the episode of Market Buzz. Link in the description. But it's interesting because like this has been one of the most technical markets I've seen ever, in terms of like respecting the RSIs and respecting the price levels and moving averages. And I wonder why, right? And it's because there's no outside forces acting on this market. Like if you look at volume, for example, volume has been very tamed. And I think the only people that are moving the stock market right now are traders. Like the person that is not in the markets is waiting, and the person that's in the market is holding. We're waiting for confirmation whether it's one or the other. And you can see just in the volume moves alone. Like I've always liked volume as an indicator because it's
Mm-hmm.
real. It's the number of stocks that
Don't
change
like
hands
button.
on a daily, right? So, and it's such a simple one, but it's like it's the amount of like in the market every day you're gonna get X, and then if you get more than X buying, it's gonna go up, and if you get more than X selling, it's gonna go down. And this changes based on sentiment and many different factors that go in it too. But yeah, in the sense of the markets right now it's who knows, right? Who knows? But the technical analysis tells you an interesting story, which is like, okay, like based in the past. That's why whenever you make a line, you put it based on in the lightest things, because it's what the people that are attentive to the market are doing.
Mm-hmm.
But also knowing what's the outside forces of what can make not only institutional investors, because institutional investors, whenever they sell in bulk, whenever the whales sell, they're gonna move markets, but also just understanding the additional forces. Like, why is the Fed important? It's like, why is the Fed able to move the markets 2%? And it's very similar to why Trump can move the stock market 5-6%. And it's just the level of power and the level of value that their voice had.
You know what, Trump, I think, is more powerful than the Fed as far as sentiment, because the Fed, they're not gonna do anything crazy. They're not gonna help you in a time of need. They're not gonna cut when we all want to cut, and they're gonna hold. But Trump is gonna do something
Yeah,
despite.
yeah,
So maybe it's not more powerful. Maybe I should say it's more dangerous than the Fed.
correct. And the thing is like the Fed, it is very predictable. You know
Yes.
what I mean? Like they have a couple of tools at their disposal that they're able. It's almost like they have a machine and they have how many levers? They have the interest rate lever, the balance sheet lever, and like the what else? Like it's like
They have other liquidity tools that they
yeah,
created after the global financial crisis.
correct.
I mean, for the price of oil, they can't do anything about the price of oil.
Like they can have an impact based on the chip, but it's not like it's like because whenever I speak about the Fed, it's almost like the Fed has this hammer
Mm-hmm.
And it's like, okay, like there's the economy is a glass ball, and then they're like, bing, you know what I mean? Bing, until one day they hit it too hard, and then it can just explode.
Yeah. They only. I mean, it's like the quote that says, "To a man with a hammer, everything looks like a nail."
Yes.
Yes. So the Fed is the holds the hammer, and interest rates nailed, inflation nailed, and because it's not supposed to be, the Fed is not supposed to fix everything. The Fed is supposed to just adjust according to the executive. But if the executive is fighting with everyone at the same time, is trying to cut government funding, trying to cut
You
um,
know,
immigration.
it's the economy is like all of these issues are like like small crystal balls,
Mhm.
and the Fed can like tap a couple of them, and then Trump is like juggling them all. He's just like I want to play with them, and it's like I'm gonna play, and it's like it creates such uncertainty too, right? And that's the Trump effect, I think. It's uncertainty, uncertainty, uncertainty until he clears it out for you, for sure.
Do you follow that account on Twitter, Universe Jim Cramer?
No,
No?
no.
Okay.
No, but I know there is. I think I know it. I think I know it. Is it the one that is like whatever Jim Cramer says, he'll trade the opposite?
Yes.
Yeah, yeah, yeah.
So this morning Trump said that he can't wait for the replacement of Jay Powell. And then this guy tweets, Trump is considering Jim Cramer to replace Jerome Powell as the Fed chair. I just sent you the tweet on WhatsApp. Okay. And then you're watching this, and this is what the market is like. Okay. It has become a game. It has become a game to the day traders, has become a game to the people that they like the action, they like to gamble a little bit. Because I mean, if you want to make it, if you want to use it as gambling, you can. There are so many tools that you can.
For sure, for sure. I mean, the difference between gambling and investing, it's an interesting one, eh? How would you describe those two things? So like, what's the difference between gambling and investing?
There's a huge difference. I think if you are short term, you're playing with the probabilities because even the best company in the world with the best balance sheet, the most revenue and all that, it can go down in the short term. So if your time horizon is just 2 weeks, then you're just gambling that it's gonna go up or it's gonna go down in the next 2 weeks. But if the fundamentals are correct, you're gonna get there eventually. So time horizon is one. Then the allocation. I mean, are you going 100% NVIDIA?
No, no, no.
No, I wasn't asking you. It was just like a rhetorical question. If
Correct.
you're going 100% NVIDIA or 100% Amazon or 100% Microsoft, you are gambling a little bit because,
Actually, I actually think that stock picking is gambling if you don't do it correct. Like, you know what I mean? Like, if you want to invest long term, buy the S&P. Buy 500 companies. It's impossible for them to go nuts.
yeah, but you know what? That's 10% a year. I mean, what's your average? As an
Right
investor,
now,
yeah,
right
like
now I'm sitting on
you must be like 20, 25% a year, right?
around
Around.
2025. Yeah, yeah, yeah.
Yeah, me too. So there's a huge difference between 10% a year and
And 20.
20% a year. I don't know who said it. I think it was Raul Pal from Real Vision. He said that the S&P does not worth your time. 10% a year, it's going to take you unless you're starting with $500,000, it's going to get you nowhere for a long time. The NASDAQ, which is 18%, okay, you're getting somewhere. So that's why I mean, I wouldn't describe myself as a stock picker, but I don't invest on the S&P because I want to make more than the S&P. And if you do it long enough and you see that you can beat the market, then you keep beating the market. At the time that I'm not going to be able to beat the market for 2 3 years in a row, just buy the S&P. If you can't beat them, join them. That's not what they say.
Yeah. Nah, it's interesting. Yeah. But also, yeah, so I tell you, I'll describe you the difference that I have between investing and gambling. Imagine you have a coin.
Yeah.
Okay. It's a 50-50 coin, perfect sided coin. You're going to get each side. You're 50-50. if you're a gambler, right? For every dollar that you're betting on this coin toss, you're likely to get, let's say, 90 cents. So
Yeah.
your expected value is 95 cents, right? So if you win, you get $1.90 or $1.95.
Mm-hmm.
So $1.90, and then if you lose, you lose your dollar. If you play this game for infinity, you're gonna lose all your money.
Yes.
Correct? Now, an investor in the same game 50-50, the difference is that instead of potentially losing all your money, you're getting positive expected value.
Yes.
Right? So let's say every time I do the coin flip, I bet $1, and every time I win, I get $2. Or no, sorry, I get $3. Right? And whenever I lose, I'll lose the dollar. Yeah, I'm gonna lose, but if I play this game for eternity, every single time I roll the coin, I'm expected more money.
Yes.
And that is the difference when you invest and you gamble, in my opinion. It's every single time you make a position, the factors that you're taking into consideration are making it so you are expecting a positive return every single time, whether you make a trade or you make an investment or you put a position. So you essentially become the house, in this case, right? Because I think in a casino, the person that comes to play gambles and the casino invests,
Mm-hmm.
because they're expected to win money in the long term. And I think that that's where a lot of people going wrong when they either put too much money in one single stock, they're not able to lose, and then they have to sell out of panic, or they make irrational decisions because they have put themselves in an irrational situation.
Mm-hmm.
So that's why every single person that I talk to about investing, I'm like, okay, do you have an emergency fund? No? Okay, then don't forget about investing. Do you have debt? Forget about investing.
Yeah.
You know what I mean? Because it's I can tell you how to get a 35% return here in the UK, guaranteed. If you got credit card debt, that's how much you're paying every year. Pay that off. You know what I mean? You don't have to pay the 35. So it's interesting. It's I think for every person is different, and I think the S&P has its place, because it's if you want market exposure but you don't want to be paying attention to it, because one of the things that you said before was 90% of this job is reading and studying and analyzing. And you know what the funny thing about this is that, let's say one time you're I don't know, researching you hear a news event, and one stock went up 30%, and you're like, what happened here? And then you do a little bit of research and you're like, okay, superconductors. Superconductors are the next big thing. The Chinese have figured out a superconducting way, and then it was a lie, and then the company dumps. And then you go through GME, and oh my God, GME is going to change the future. They only sell PS2 games or PS3 games in CDs, but they're going to be the future. And then the stock goes crazy. But then it was what happened? Well, market dynamics allowed for that to happen. So you start building your arsenal of tools in this case, right? You start building this sort of short squeezes are a thing. Gamma squeezes are a thing, right? Sometimes, the news has effect in what's happening with the stock. Maybe, I remember one time I had Tesla open in my watch list, and then the news popped up. It was like, Tesla about to get inputted into the S&P 500. And I was like, 5K, just take it. 5K into Nvidia, 10% up in less than 2 days. Why? Because of the news. And then if you're first, you make money. If you're right, you make money. So you have to learn all of these different things.
And if you are right and late, you get nothing.
That means you're wrong. Being late or being early.
It's wrong.
Being early is wrong too. So, it's funny. It's super, super intricate. And sometimes the one thing that you learned when you were young, like my Nvidia trade was because I started mining in 2017 because I wanted to play games, and I built my own computer, and I had an idea of what an Nvidia graphics card was. So it's this was a piece of knowledge that I had over other people. And then that became alpha. In the stock market. It's crazy. And it's that's why sometimes if you want to become a even an investor or a stock picker, or sit events and just I have access to Jerome Powell. How much money does he manage? How many lives get affected by this man that I'm just able to sit in my living room and listen to the guy?
You know what? I think he's responsible for more money, more lives than any personal life, for sure.
100%. You know, he can create a famine. You know, if he was like, sure, maybe there are forces that will stop him from it because he's not an elected official and blah 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 blah.
You
But
know
he still
what?
does power.
I'm sure you remember too, a couple of his press conferences, not lately, maybe a year and a half ago. Do you remember when inflation was like 7%? And he was getting up there like hawkish and saying, oh, we're going to get to the 2% inflation. We are committed to the target. And you can see the market taking a dive, like a 2-3% crypto was a bloodbath for crypto. And you have to go through those days. You have to experience those. I can't describe them to you. You're not going to understand.
Yeah.
And even if
unless you sit.
you have like $500 in it, it's not going to make a difference. But when you start getting like tens of thousands of dollars invested and nothing else in the market is going wrong, but just one guy in a late afternoon on a Wednesday talking about inflation and the market takes dive, then you're going to understand that it matters too. So the fundamentals is one thing, the technicals is another, buyers and sellers on any given day, but there are other factors that, such as Trump or the Fed, you have to take into consideration. And another thing that people don't seem to understand is the Fed can say the same thing on 2 different days and the market has a different reaction.
Correct.
It depending on the, right?
Yeah.
Exactly the same thing on 2 different days, and the market's going to have 2 different reactions because the setup plays a role. Yesterday, the setup was Nvidia took a hit because it's not allowed to sell to China. Okay.
No, they're allowed to. They just have to apply for the license.
Yeah, but they're not going to get it for a year, so basically they're not allowed to. All right. And I remember you texting on the chat that the New York Fed Williams was a bit dovish. So the market went into the meeting with the expectation, at least I went to the meeting.
Yeah, dovish expectations.
Expectation on, okay, he's not going to cut, not that dovish, but a dovish tone. We are here for the market, something like that.
But he said it. We're not here for the market.
Yes, he did say it. And that on a different day, it doesn't do the damage it did yesterday.